Hello, good morning. Welcome to another ES Futures Trading video. Today is Friday, July 7th. It is 8:50 a.m. Jobless report, the employment situation number has happened just 20 minutes ago and has gave the market this spike to the upside. We have a spike to the upside. Inventory was absolutely 100% short. The spike kind of like took care of the overnight short inventory. And then the spike, the market just liquidated the longs in like 5-10 minutes. I don't know what the number was, but this seems to be like a neutral number. Let's take a look. Monday, Tuesday to Friday, employment rate, non-farm payrolls. Oh, consensus forecast is actually lower. It's supposed to be good, right? Because this decreasing, it means that the Fed policies are working. But who cares about the number, right? What matters is what the market does with that number. Once you have this spike to the upside, the next thing is, there's a tremendous amount of short here. Weak short inventory here. This spike could have gone all the way up to here, but it didn't. It didn't. Let's see. Did it take? No, it didn't even get to. It closed at these distributions, but it didn't get to the high. That's one thing. The other thing, if you are, it's absolutely hard to trade this kind of, almost impossible to trade these news events. But there was something today, just for you. There was something here. We have this. If you remember, I guess where it is. No, I guess the histogram will show it better. What happened here? This is the spike. And notice the tremendous amount of volume. This volume here, this 2000 volume blocks here happened when the market not when the market took this high out, but when the market re-entered this high. It starts to accumulate. It had some, hundreds, but not this one. This one happened when the market re-entered and the liquidation of these longs started. And the market went all the way down pretty much to the opposite side of the overnight session. And while going to the downside, you just have to see how far this market can go. We have this high volume area from yesterday, really high, and a hard back. This low is pretty much exactly one tick from hard, but this is hard back. Actually, that low is not good. The market is kind of, the overnight inventory is balanced. That's what I say. The VIX is 15, very low. What happened? Let's see. What is happening with the bond market? Today you have the bond market, oh boy, really close to the low. Yesterday was the 10 that took this low out. Now could be the total 30. We can have something here to the downside. Wow, look at gold. Gold seems like it's setting for a rally here. No change in crude oil. And dollar. Let's look a little bit deeper here. Spike, same thing, spike to the upside and then break. The dollar is, what happened with gold? Alright, not that much actually. Let's close this one. Now, this is one of the hardest things. We still have more than 30 minutes before the opening. And if the market opens inside here, this would be just kind of like a continuation of yesterday's trade. Yesterday's trade here, and with overnight inventory pretty much out of the way. Now, is the market going to close to the downside? I mean, the week. I mean, 1, 2, 3, 4, 5. This is Monday. This is for 1, 2, 3, 4. This is Monday. And today is going to be Friday. Before there was such a significant amount of new things that happened yesterday. Let's take a review. We have seen this chart from yesterday. The bonds are already seeing the opposite side. Now, bond market make a new low on the 10, the 30 as well make a new low. The break is breaking out of this range, breaking out to the downside. If this would buy, there's going to be there is some serious liquidation here actually. And what I see in this is because this, if the break, if bond market develops, the development is kind of sharp to the downside or to the upside. It can actually drag the market down. Yesterday, we have good volume, well, at least better than the previous day. It's about the media, I was saying the average as last week, but higher than yesterday. This is what I was checking yesterday. We have a liquidation at the opening, and then short covering. Market got too short, and it formed again. Notice this, like a V shape here. That is the second half of the day. There was no back and forth here. Now it was just, liquidation and then recovery. And these kind of formations actually kind of like a weak in the market. It's going to do what it is. It giving me a sign what the market is going to do now. No, this is just information here. And these are the histogram. We have seen the potential destination which was reached. Feels, and this is new volume, new accumulation volume. This part is out. I don't have that one now on my charts. And the tremendous amount of volume, really big volume here. This time, when it's going to the downside, here, this was buying, and then it's Market got too short, new buying here, new buying here, and more volume up here as well, at the very high, at the very high. My histograms, the potential destination in the upper side, again the formation, the same formation we have yesterday. The whole day on Wednesday has the formation that yesterday has in the second half of the day, and this time it's looking to the context, right? Remember the context now, the market could be in liquidation mode. That's one of the scenarios that is playing, and the market is stopping right here. No, it just, I mean, it is just very close to the low of this pullback low. This I don't know what day is this. This is Thursday last week. Okay, and actually gives the market. It weakens the market. This market is kind of weak because we have 1, 2, or 3 lows now together. And below that we have another 1, 2, 3, 4, 5 lows pretty much together. And being this the potential, if something happens to the downside, this could be the potential destination. This area here, this area here, or this area here, with the ultimate destination being this one down here. Something really important from this day is that this low is very mechanical. This is hard back of this the whole day. This one, notice where it was both hard back here, and that's why I call it weak low. It is the 4400 as well. I'm not saying the market is going to go over there, but if anything happens, usually problems will happen around this area. There could be, I have highlighted this area, there could be some acceleration or some spike once the market takes this area out. That's from the past. And I keep in that because it's not too much time has passed since this happened. Ooh, look at this, very weak market here. Market is having extension to the downside. The spike is up here. And what about if the market opens down here in this area? That would be a very weak market. Very weak market. All these longs here. I will be forced to liquidate. And what we have from those lows, look like tremendous amount of congestion here. And the market really tried to do, try to recover, try to get back inside the gap, but it was really hard. Market has really hard times doing that. The weekly, monthly, weekly, and daily time frames, we have a range. The market is still inside our, is keeping the breakout of this range. Notice that there is no excess on the high. This could be actually kind of like too long here. The weekly, the potential destination 43.27, 43.30 in the weekly time frame, but before it has to deal with 4400, it happens to be also trend line here. Multiple gaps here. But something that I noticed from yesterday is the market re-entered this range, but closed it above. There's a good excess here. There's good excess here. And this bar, this is the range. Significant gap to the upside, and we have more gaps on the lower side. And notice how far it's from the 50, and how separated are the 50 from the 100 and the 200. Kind of like an overbought market. And interesting things are happening in the weekly time frame. What we have in the weekly time frame is, we have the previous week is an outside bar. It's not just an outside bar, but it is an outside bar to the upside, because we have this inside bar, which is a form of balance that has a breakout to the downside. It didn't break out to the downside, it break out to the downside, but the breakout to the downside failed. And the market took the opposite side of the bar and closed above, closed outside the inside bar to the upside, which is a positive sign actually for the market, because it's an upside bar to the outside. And the next week or the next weeks may have good odds of taking this high out. What happens if that doesn't happen? That's another thing, right? What I got here, I was talking about the outside, the past week being an outside bar to the upside, actually, right? Being outside bar to the upside here. If anything happens, the first thing going to the downside, the market has to deal with the 4,400 in the weekly time frame. And that's why I have these marks here. This is a weekly inside bar high, which was the high of the overnight session. What else? What else here? Wow. Look at what this market is doing. This market is doing some damage to the downside. But it's still, overnight is still inside yesterday's range. Okay. You had your trade. You have your trade here. This was the trade today. Location, the high of yesterday's range, market re-enters. If the market comes back outside this range and take the high out, comes back, meaning, now this is, it is hard, okay? This is not easy. Nobody said trade was easy. But if you need something, and this day is the context is different, very different than the other days, okay? First, this market has a spike here. It did something like this, and then it went higher here. And when market is coming back, that makes really high volume blocks. No high volume, but high volume blocks. That I was watching here. And this is the location, right? You got this high here. This is a short here location, based on what we were talking. This formation here. Come on. This formation here to the upside, and the potential being this is the short covering. Right? All this volume making the loop or the pin. That could be some liquidation here. Right? Market gets too long here. I mean, if you got your short here, as soon as the market comes back to this high or this level, the market does this and or gets too close or takes this high out, that's an out. That means that my trade, my trade is not working. Right? How far it can go? I have no idea. Well, but the first potential destination is, since I have this value area, I cannot see it, but this is the first period, and also is held back now. No? This could be some potential destination, or this one down here. But in between, there's a lot of high volume high volume going to the upside here. Mm-hmm. You notice how this can be like high volume, high volume, high volume, high volume here as well, and high volume out here. This could be the end of that trade. This one. This could be the end of that trade. Could be covering. It's easy to see in hindsight, right? I'll try to make sense. Markets make no sense, but sometimes this kind of volume helps to identify. Now, the next thing here is the market is still inside previous day range. This is a very prominent overnight POC. Prominence POCs tend to attract the market. A couple times, 2, 3 times, I don't know how many, but tend to attract the market back and forth. The other thing is, it is pretty much at the center of yesterday's range. Right? The closer to the center, the higher is the odds of having a rotational market once the market opens. The exception is, if the market fingerprint is way out of this range from the opening. My idea here was that this market is kind of like too short in the shortest time frame. It has just this gap for me is really big. It is just too short in the shortest time frame. What this spike does is it's just removing short inventory from today's overnight session. Okay, nothing else. It doesn't change the fact that this rally looks like a P shape, and we may have some downside continuation here today, which would be the liquidation of this long inventory here. We have long inventory here, a reaction of the extremely short inventory from before, and what could happen here is maybe we can have a liquidation here. Now that these shorts have been removed, this short has been removed. Now, a market opening inside the spike that's one of the hardest situations or scenarios for me, okay? Because it's a neutral. Opening below the spike, opening down here is a negative sign for the market, which would be in sync with what's happening right now. No, we may be, though this might be the early stage of a long liquidation or a correction of the market. But remember, right? The monthly has no excess. The weekly has no excess as well. Only the daily time frame has a breakout of an inside breakout of a 3 or 4 day range. I am very neutral at this moment. Okay. If you can get that would be the best thing. Notice how yesterday's overnight high also is the POC. It's this day's POC. Multiple distributions is the same scenario that we have here before, but this time to the downside. Okay, that's a significant gap we got there. It won't be unusual if the market has some kind of rally or make some attempt to close the gap today. Okay. the thing from yesterday also is that the market closed above above original above the high. Close inside. Many things are happening for me here. It closed inside the gap and above this high here. After the market closing has closed the gap, has left this extremely, very unlikely. Just notice. Let's see if I can do this. If I can do something. Okay, notice this day here. I have split this day in two. Now the first half is ABC, and the second half the DEF. All that. Notice how this is. 1, 2, 3, 4 distributions. The POC up high, but it looks, like a P here as well. I'm not saying nothing here, okay? But what this looks like a short covering. Okay. Now next week, what do we have next week? I guess beginning. Oh, let me take this call. All right. Sorry about that. Um, and this is the thing with working from home. You have to have, man, you need to be focused when doing your work, and sometimes it's just for me in particular. For me, it's hard because I used to have another business, and I still have customers. I do still some job um, from the customers I had before, and you know, it, whatever source of money you have out there, never never let it. You need cash. You need cash whatever whenever you can, and because you never know when, especially in trading, you never know when an opportunity is going to come. Sometimes you will have long stretches without doing anything here because you won't see the opportunity, or you will see, you might see it after it has happened, and you just miss it. Right? If you miss it, for example, there was something here this day when we have this big break here after market open, after the holiday. Market open here, and you have a second opportunity here. You know, when the market has this formation here, when the market was truncated to the upside. Right? It is very rare that the market gives you this kind of that gives you second opportunities. It's very rare. It doesn't happen that often. Um, the context here was, this market was just, we were talking about this and how, come on. We were talking about how, what it is, here. How this rally we had last week was completely different than the rally that we have here. This was a bigger time frame move in the market here, and this was very, very, very short time frame. Very short time frame. The way how this market went to the upside, was completely different than this one. And being a very short time frame actually gives us good odds that there could be some rebalancing of here, of this long inventory here. If the market comes back all the way down to here and is bought from this level and makes a new range, nothing has changed in the market. The bigger time frame remains there, remains inside. There's no correction of this rally here, of this buying that happened here. Okay, so we can have a long day here to the downside, but it can be bought, and then if it's bought and then comes back inside what is now an 18-day range. Now, just nothing has changed. Everything remains to the upside. Right? This was the context, right? This rally being completely, it looked similar in the chart, but it was completely different when you zoom in, when you use market profile and see, the participants of this rally were completely different, very, very different, and the also correction were high, and that's when the market gives you this break to here, the gap, because there was a flooding. There was a tremendous amount of inventory here, pretty much flooding. Nothing was holding that. Nothing was holding this range here. Okay. Now that range has been corrected. Now this could be a continuation. But remember, everything started here. Everything that started here. If I use my other charts, Everything started here in 4400. Okay. Now, look at what it is. Look what this market is. The market is inside. Well, it's not. It's not inside the spike, right? Because this, I think the spike would be this high here. It's a spike to the downside, but it is inside the spike to the downside. I mean, it's a rejection of higher prices, basically. At least, at least here. Okay. I need to do something. Oh, the market is open now. It's about to open. Huh, I almost missed it. I was going to take a break now, but I completely... missed the... was going to miss the opening. Okay. Let's see what this market has. The context is market is opening at center. Okay. At center of yesterday's range. Now notice how the market is right here. Center here. Now, well, the closer the market opens to the center, the higher they also chop. Or being a chopping market, the higher is also having a rotational market. Like there is some rejection of higher prices. Overnight POC is very prominent. Inventory could be too short. I mean, very, very short inventory could be short. Okay, okay. Oh, what? Oh, also next week, this the kickoff of, this is the beginning of yearling season. And what do we have next week? PPI inflation rate on Wednesday. Okay, there could be something today actually. Oh no, I mean, it has already the break has happened. There could be a break or a rally because we have inflation rate on Wednesday, PPI on Thursday, what consumer sentiment on Friday. The week after, I think is we have a FOMC again, right decision by the Fed. I know there's some correction of the overnight short inventory. Not of the host, but the late, the spike. What I mean is this spike here. It's very short here. Market very short. Many things to monitor. This weak level here has been corrected. This one has been corrected also. Intradays. This is a weekly inside buy. I don't know why I keep this one. Let's keep it there. Oh, look at that. That's short covering. What you have there? You're seeing there's short covering. Can you see how fast this goes? That's short covering. Short covering, short covering. If you see a spike here, that could be the end. There's short covering. That's a very dynamic market though. Come on, this high is not good. Barely mechanical selling here. That high is not good. And this is what can mislead trade. Oh, okay. Okay, that's better now. Notice that the very prominent overnight POC has been revisited. Now, the next reference to monitor for continuation is settled and daily high. Yesterday's high. Oh, very low volume here. Come on. Very low volume. This could be a good day to the upside. Because when there is no bigger participants, I'm not saying that's the case, but look at this. This is the lowest volume of the last 10 days at the opening. Some crazy things can happen. No? Okay, this is what can mislead traders here. This is just short covering, right? It's a removal of the short inventory from the last hour. And traders can misunderstand that for a more serious buying. Is it that? It remains to be seen. We are still inside yesterday's range. Market open right at the center. Also chops are high. Chop is very costly, both financial and mentally. Especially mentally, if you lose your mental capital, it's really hard to get back on your feet. And notice how this is the center. There's a lot of chop going on here, and they also having a rotational market are also high when we have this kind of environments. When the market opening in these areas here. And notice where the market is now. It's back at half back. It's trading around this concentration volume from yesterday. This concentration of the volume was to the downside. Okay, then it was taken out, and we have some rally in the second half of the session, but the rally couldn't close the gap. Just part of it. And POC, the fairest price of each business being conducted, ended being this was the gap, right? Well inside the gap. My bad. It was well inside the gap. I thought I was taking this. Why I did that? No, I was taking this line here. No, my bad. The gap the market closed well inside the gap yesterday. There was an attempt to close the gap yesterday. And I guess, and having inflation, core inflation Wednesday, I would expect something maybe today or Monday. Some kind of this directional movement, which would be rebalancing of inventory. The rebalancing to the downside has happened. Yeah, the rebalancing to the upside, it was what could be missing here. Or if you see it, you can it could have happened here, right? Now the second part, the rebalancing, the hedging happens here to the downside. You're trying to see trying to identify what the bigger time frame money is doing is how it's not the objective here, right? Because it's impossible. It's really impossible. Nobody knows that. Nobody can know what they're doing, what bigger money is doing. It's impossible. There's so many ways to hide it. And this could be something like what I have here. This kind of big blocks could mean something, but it's just one drop in the ocean. The upper side. Notice where this. I mean, the high is last, and I don't use these high volumes too much. I don't clinch to those ones. All right. This is more like for the intraday, right? This thing just for the intraday. Let's see how the market is doing, right? Because in the bigger picture, we show you we show you here, for example, high volume. This high volume has last there. You have last there. The other one is the market high, is the value area high, or is previous day high. What do you have around this one, this area, accumulation volume, or this high volume level here? You have hardback there. Right? What do you have in the other one? You have value area high, value area low, my bad. And so you have a lot of things like that. Now, that's why I this is not no, it's not my intention to give it can be confusing having a lot of things here, right? A lot of lines here. To prevent that, I kind of like I use some color code here, for example. This line here, for example, when the market was breaking, I was thinking, maybe where the market can go, right? Where the market can go yesterday. And one of the things I'm going to notice the color is orange, right? Why I put the orange? Because it's hardback. And my profile has hardback as orange. And POCs is green. So if I want to identify something, what I would do is I would put it there, right? POC. I know it's POC. Because it can be that this POC is kind of a little bit far back, could be far back, or this hardback here, all right? I had it here like that. And when the market yesterday was selling, or doing this selling, and just stalled it here, right? It came back here, took took the POC, then come back down here, stop here. There was some also down, some continuation, but every time the market took the next level, it was weaker and weaker. The movement was weaker and weaker and weaker. So that's why I have these things here. And color coded. Right? I know, for example, the blue are high volume areas. If I want to see further, I have it here. I have this. This is kind of like blue are to the downside and these greens are to the upside. You know? I notice there's a lot of this volume still. If this is a continuation of yesterday's trade, there's a lot of high volume here. A lot of high volume in this area, in yesterday's range. Volume going to the downside, which are the blue ones, blues. Volume going to the outside, which are the green ones. There's a lot there. So if you see that in context, see what the market is doing now, it kind of like make some kind of sense, right? There's a lot of things going on here. And what do we have here? What we have an inside day opening right at the center of yesterday's range, which give us high odds of being a chopping market, right? Chopping market with high odds of having a rotational market as well. And look at that, high volume, all the way up, all the way down yesterday. So that's why I tell you, don't focus too much on these volumes here, on these volumes, and these high volume levels here. HBA is high volume level. I will give more relevance to, I tend to give more relevance to the high volume areas, which are these ones. I have one here, and another one here. Okay. I know that this one is to the upside, okay? And notice us, okay, if you want to get rid of these things, notice what do we have here, the 4400. It's just right there. I do this because I tend to forget. I tend to forget what happened this day, for example. Right? When I have this, I remember now. Okay, I remember what happened here. How this volume was, how there was accumulation of volume. The market tried to take the 4400. It failed, and then that was the base for the rally. Right? It gives a mechanical, a weak base, but that was the beginning of this big rally. You know? And all this inventory here were trapped. The same thing happened here, in this area here. Same thing. It was here or here, I don't remember. Okay. Oh boy. And to see that, I have to look in here. 4400. Okay, the 4370. What is the 4370? Oh yeah, down here. What? The spike buy. But what do we have there? The base of the spike. I mean, there's no spike here. That was an upside spike here. A previous spike here from the beginning of the month. That's why I decided to keep it here. But can you see what the market is doing now? You got 20 minutes. This volume today is going to be very low. Notice we are almost half. It could be something like yesterday. It could be. But the first half or the first period or the session tends to have a really high volume in the first half. It tends to be really high. The second half is sometimes reduced because if you project this, it should be higher than yesterday. But that doesn't happen often. Okay, when we have that, it's when we have days like yesterday. We have good odds of having a days like yesterday. All right. Because I was talking, I didn't see how far this market was pulled to the downside. Bonds are recovering. Okay. And that's when I use the 5-minute chart. Oh, it came back to 40, 35. Yeah, it came back down to here, to this area here. It was pulled back to this volume area here. And then the second one did not. 37. No, yes, still. Yes, still here. Uh, very choppy markets now. Alright, I'm going to get a glass of water because I'm thirsty. I'll come back in a moment. Alright. The question is how many trades have you made so far? 1, 2, 3, 4. No, I haven't made any. No. Something that could be very helpful to understand markets is I can show you a video here. Pete Steinmeier. Of Pete Steinmeier. Let me look at my history because I was rewatching it last weekend. Oh yeah, this is the one. This could help you a lot to understand market dynamics. Right? Watch it. It is a long one. Oh, look at this. The first period is about the market is about to get out of previous day range in the first period. We will come back to this later. That's a positive sign. Remember when we talk about the exception when the market opens inside previous day range. Now we have high odds or chop, right? But one exception is if the market single print is way out of the range. And we have plenty of time. Market has plenty of time. Has 8 more minutes to take this high. There's no polling here. Overall, market market's about to take this high out. This high is very questionable, very, very questionable now. Now, if this high is not taken, I will see this low. There could be some serious liquidation here if that high is not taken. Man, he just stopped one tick. He stopped one tick for taking that high. Man, that's crazy. And what is happening here, right? He was, Pete Steinmeier was selling something. He was selling a software here. I can give you the part of this is very informative. You know, it helps to understand market dynamics. The way how Pete was, I thought, you know, what he was selling is a software to trade, and when you put I mean, to have a program to sell the market, to sell or buy the market, you are assuming the market can be predicted, right? You are giving mathematical parameters to the market. And I don't think that's the case. There is so much uncertainty in this business that the odds that I mean, it doesn't mean it's not going to work, right? It can work because exactly the same reason. But the thing is, it's going to be can you repeat, right? The success over and over. Can it be consistent? Now there's some selling happening here. Did you see how the market is moving there? There was a pullback, some removal of the longs here. There was a pullback, come down to here, this area. This is the thing. When I honestly, I cannot do two things at the same time. Now I'm trying to do this stream and observing the market is really hard, no? If I want to trade, it's not good. My odds are decreasing. Now you have location here, okay? Market is too short. Was too short here. Too short. The overnight inventory added more shorts. There was some correction yesterday. And now what remains is this inventory from the overnight, the gap. The market shouldn't have any problem trading through the gap because there's nothing there. Notice how the accumulation that we have here in this area is less than, you know, it's just 6,000. There's not 10K here. Nice momentum though. Nice momentum. No reds here whatsoever. That high is very questionable, man. Very questionable. You know, and the market is going to open. The second period is going to open right up there. This seems that this could be some serious day to the upside. if we have upside continuation after 1 minute. Is 1 more minute to the open. There's a lot of trading going on up here, or could be some liquidation here. Volume is very low. This is why I say that there could be some serious volume movement to the upside, because there's nothing here. Notice the difference from yesterday. Oh, come on. Very low volume relative to yesterday. And when I see when there is lack of volume, there is smaller participants that are in control of the market. Now has been sold 1 tick above, right from this high. This no good. This is not good. This is not good for the downside. I mean, this is a healthy correction actually. It was yesterday. If this goes to the upside. And this kind of day here, if this ends up being sideways, we end up having sideways trading here. This would mean that yesterday was just a correction. The odds that being a correction, just a rebalancing of long inventory are higher, rather than a liquidation, right? Than more heavy liquidation. Man, but the gap, look at the gap. The gap is not being affected here. I think it's to the downside here. No, A couldn't take this high out. Value is overlapping to higher. Starting to overlap to higher. At the end, we have some congestion in the upper side. Do I have a direction here? I still don't have a direction here. Market has, also why I would like to be short here if the market is going higher. Right? Now, the sign of what kind of traders are here, right? The selling is coming from yesterday's high, the buying is coming from saddle. More serious money is coming from here, from this area. But since the volume is very low, relative to yesterday, I tend to disregard what happened in the session. They have that kind of volume, right? Or the interpretation is different. This still could be just a rebalancing of, a counter-action to overlying inventory. This, as soon as the market gets into the gap, gets back into the gap, it just dies there. Because the lack of volume, because there's no volume back in this movement, this could kind of like grind its way to the upside. Okay? Just because of this. I can go slowly going to the other side. Okay? And the main thing would be now value. How far I can move value to the upside relative to yesterday. Right now we can say it's inside value. Notice how the market die here. I'm not open here, and when it starts going lower, it kind of dries, right? It dries. We have volume. There's something here trying to go to the upside. If this upside movement fails, there could be some liquidation here. And that can happen really fast. Very narrow range here. This market is not having upside continuation. It is just struggling again. It struggled yesterday. It's struggling again today. Okay, it is 10:10 in the morning, and unless you have any questions, I guess I'm going to call it a day. I wish everybody a good rest of the day. Stay safe out there. Bye bye.